Hello and welcome back to Lipper's Fund Flows Insight Report. I'm Jeff Turnahoy. For the weekend of July 23rd, 2014, the conventional mutual funds industry saw small inflows into long-term funds while money market funds had outflows of over $5 billion. Let's take a look at our macro groups and see where the activity was. Well, this week we saw equity funds take in just under $400 million, while taxable bond funds also saw their recent trend lower, as they saw about $1 billion in inflows. Municipal debt funds saw a spike in inflows this week, up over $600 million, while money market funds again had outflows, this time of about $5.2 billion. Well, for equity fund investors, they had a lot to think about this week, what with the Malaysian airline passenger jet down by Russian separatists in the Ukraine. We also saw the fighting intensify in Gaza as Israel started a ground offensive. So a lot of market activity. Remember, this is the heart of earnings season. Tended to take a back seat to some of the military events out there, and a lot of saber rattling going on elsewhere, let's not forget. So overall, the market was fairly flat for the week as investors were trying to figure out just what exactly was going on. So again, let's take a look at equity funds and see where the activity was. With about $379 million in inflows, it's a fairly slow week for them. Despite flat performance, we didn't see too much going on in the market. We caught a few record highs here and there, but really not a whole lot of day-to-day swings in performance. Overall, the investors tended to take a slightly conservative bias in their approach to investing. When we're looking at the trends overall, we could say that like large cap value seemed to draw in more assets this week, about $433 million, than large cap core, which saw outflows of about $332 million. So overall, a slight conservative bias to investors' taste this week. We'll see if that trend continues on in the coming days. Let's take a look now at equity ETFs. They had outflows of about $8 billion this week, led by SPY, the world's largest ETF, with $8 billion of outflows itself. Coming on the heels of that outflow, the core S&P midcap, the IJH, also had sizable outflows this week, about $1.4 billion. But at the other end, we saw some interesting moves. The core S&P 500 IVV had inflows of about $1.2 billion, and the low volatility S&P SPLV also had pretty good inflows this week. What was curious, though, is that all of the 5 highest outflow ETFs this week had upside performance, whereas 2 of the 5 highest inflow ETFs had negative performance. So clearly no performance chasing going on here. I think these were more tactical moves going on in the market. The next group to take a look at is taxable bond funds. Again, they had inflows of about $1 billion. This is down, as you can see, from recent trends. Overall, 5 basis points of performance this week. That's modest. The most extreme moves this week in terms of flows, high yield funds had $1.3 billion in outflows. Not far behind them, at least in the table, is loan funds with $412 million in outflows, their second consecutive week of $400 million plus in outflows. So definitely 2 soft markets that investors are having second thoughts about right now. At the other end, core plus, general bond, a lot of the regular intermediate investment grade types saw inflows this week. So definitely investors are starting to get concerned about the credits out there and looking for better quality investments right now. If we turn our attention now to taxable ETFs, a very different story. They had inflows too, but they had over $1.7 billion in inflows, so really outperformed or really batting above their recent averages. High yield funds tend to see outflows, which matched what's going on the open-end side. Treasury funds, except the long duration products, tended to see good inflows this week. So again, a little more extreme version of what was going on with mutual fund investors. The next group to take a look at is municipal debt funds. They again had $614 million in inflows this week. This is great news for them. After a setback a couple of weeks ago with over $800 million in outflows, the last few weeks are making up for that. They've had 2 good weeks of performance as well to bolster things and help settle investors' minds a bit after some unfortunate news out of Puerto Rico, which again I don't think we've seen the last of. Intermediate muni continues to lead the inflow race here. year they took in about $147 million. Actually, high-yield muni funds won the inflows race. They took in over $294 million this week. So again, that high-yield muni with its very good yields attracting a lot more investor attention and dominating the inflow tables for municipal debt funds. Well, now we've come to the last part, the money market funds flows. Again, they saw $5.2 billion in outflows this week. This is another negative week for them. Not much to report here other than retail investors allocated about $1.5 billion to money market funds, while institutional investors subtracted $6.7 billion from theirs. Interesting article in Ignites this week where a Boeing representative was quoted as saying that if money market reforms do pass muster and the floating NAV becomes standard practice, that institutions such as Boeing may have to reconsider money market funds as their place to park cash, because it does involve some tax consequences that until now, and until it's finally resolved, poses a problem for institutional investors. So keep your eye on developments here. This is where it's going to get interesting for some of these investors. Well, that'll do it for this week's report. Join us next week where we'll discuss the flows out of and into mutual funds and ETFs. Thank you.